How do you interpret news in a context that allows you to stay rational and make sensible decisions on the selling side?
One of the things we try to do is we discourage our analysts from reacting to news by changing stance or suddenly changing numbers. Now, obviously, the investment community wants to hear some reaction, so we respond to it. But we really try to discourage analysts from changing stance on the back of good or bad results, or changing stance on the back of a profit warning. And I found that to be useful over time. None of us really have the mental faculty to deal with our emotions. If people of Shiva's caliber get carried away by emotions, lesser mortals obviously have very little ability to deal with greed and fear. Given that we can't deal with greed and fear, the circuit breaker we have put in place is, we are trying not to use the results, good results, bad results, profit warning, GDP growth, etc., as signals to suddenly jump on a bandwagon and tell the markets to either buy or sell. So the less news flow driven work you do, the less news flow driven thinking you do, I think the better. It's one of the paradoxes of working in the market, but I do believe the less news flow driven work you do. And one of the interesting things I found when I wrote Gurus of Chaos was with the investors I interviewed, and there's several of them in this room. Not once did they look at a Bloomberg terminal. Not once did they take a phone call whilst they were talking to me, and I found that stunning. And I remember spending 2 or 3 hours with you, a couple of hours with Akash, a couple of hours with Shiva. Not once did you guys look at some price reaction or take a phone call. And I've met you on weekdays as well, said you don't look at Bloomberg. Akash met you on a weekday. So I think those are the circuit breakers that we have, but it's the deadliest part of our profession to get swayed by emotion after reading something.
So Ramesh, would you subscribe to this same point of view? No. So that's great. Let's have your point of view. How do you react to news? How do you interpret it? How does it affect selling?
For an investor or a speculator to stay away from news is the Pope saying, I want to stay away from religion.
I thought you were going to say from sex. I just missed that. Ramesh.
It doesn't make sense. How the stock reacts to the news is actually very important. You will see at the top of every bull market, the news will be bullish and the stock will ignore it and the markets will ignore it. And there'll be huge volumes taking place, and the bulls will think, oh, it's just going to go up now, this is going to happen, that's going to happen. Markets have innate sense. So how a stock reacts to news is more important than actually us reacting to news. That's what I find.
Over the years, over 20 years, what are the things that you must have faced many of these panic situations in those 21 years that you ran money? So can you tell us, can you share something of your experience in how one responds to a panic situation in the market when they press the red light and it's flashing?
Well, obviously you grow older sooner. But having said that, I think as a institutional money manager,
yes,
you generally tend to be fully invested. So even if there is a panic and it's time to probably look for those good quality stocks which have come down, you don't have the luxury of having the money with you. And generally when there is panic, retail money also tends to go out. So you have to be prepared for selling at a time when there is panic. So obviously there is a trade-off. Do you hold on to what is saleable? Because the good quality stocks is what probably will be saleable,
the liquid.
And the liquid ones, and the stocks which you probably shouldn't have had in the first place in your portfolio is something which you want to sell but nobody wants to buy. So obviously that's the kind of situation you're faced with, and the best thing is to forget about the market, because anyway you can't do much about it, and whatever will happen is going to happen. So you shut yourself away from the ticker.
Ramesh, any last bits of advice, suggestions, sharing of experience that you think is relevant to becoming smarter at selling?
I spoke about the Pope, so it's time for confessional. Okay? I've been in this market 20, 30 years, blessed, great friends. We get together at CCI, talk about markets. So we always, We like to think of ourselves as a smart money. We are not, but we'll think of ourselves that. So we figured it out, and I've been through many a bull and bear market. 2008 market fell. I was anticipating it, so not fair. But I don't know about you, but August 2013, when the Sensex collapsed under the old regime, the rupee hit 70, the current account deficit out of whack. I'm telling you, the only time in 30 years that I felt whites in my eyes. And I just didn't understand what was happening to our market at that time. For some reason, after so many years, I was just completely shaken up by that market. I'll give you a historical analogy. When Princess Diana died, an English historian said that for 2-3 days he didn't understand his country. He said anything could have happened in Britain. A coup could have happened, civil unrest could have happened, anything would happen. I actually felt that way. I don't know what was about the 2013 panic. I've been through lots of the Harshad Mehta boom fall, the Ketan Mehta fall, the 2008 fall. But there was something about 2013 that even shook me. So that's my confessional. I still don't get what happened, but it was just one of those things that it was so savage and out of the blue that it just kind of took you in a grasp. I don't know if you had a similar opinion in any of those falls.
I'm always confused. So these things sort of pass me by. I'm such a bozo that they hit me, and before I know I've been smacked in the face, it's gone. So that's that's the honest answer. But Saurabh, you started off by basically sorting out the fundamentals of, setting up rules, which I think deal with the fundamentals, the economic fundamentals, whether they're internal to the company or the economy, dealing with selling. Any sort of closing thoughts, comments on selling that you think would be useful to this audience, which is incredibly smart and distinguished?
So the main thing John K. taught me, and on which I've sort of, built my
edifice. Is the word.
Earned a living, I would say. But the main thing he taught me was try to think for yourself. It's never easy to think for yourself, because you're all reading newspapers, we're reading somebody else's books, and we're receiving input from elsewhere. And when you spot something that doesn't inherently make sense to you, when you spot something that inherently doesn't make sense to you, sort of try to think that through to as deep a level as possible. And I'll give you one example of this man's ability to look at the world and give you very powerful insights. I think he's coming to the annual CFA Society conference in January. So whoever can attend. He's one of the legends of our time. Incredible man.
I think he is the Peter Drucker of economic philosophy. I mean, amazing man. And you should read his book. He's written a book which everyone in this room, I think, should put in the effort to read, because it's the story of our lives every day. The title of the book gives it away. It's called Other People's Money. Because we're dealing with other people's money as institutional money managers every day of our lives. And it's basically about what has happened to the system as a whole. Anyhow, sorry, Saurabh. Yeah.
So the anecdote is this is January 2007. I remember it was 8th or 9th January 2007. And he used to be the chairman of the company I had founded. And in return for being chairman, he used to give me a cup of tea every month. So I would go to his residence. I wouldn't be allowed to have any notebooks. He would sit on a sofa and you would be given a cup of tea. And you would have to drink the tea, and John would ask you questions and make observations. So he asked me then, why are UK banks' loan books growing at 12%? So I sort of stupidly replied, because people are borrowing from banks. So he says, yes, sir, I understand that, but who is borrowing from banks? And as soon as he said that, who is borrowing from banks, I realized I was on the back foot. Because UK household credit growth was 3 or 4%. UK corporate credit growth was no more than 5 or 6%. So I thought, golly, he's right. I don't even know who's borrowing from the banks. And by the way, other than being co-founder of this firm, I was also its financials analyst. So it was a little embarrassing. So, and those are the moments you sort of, you hate the man because he makes you feel like a little worm. So he said that, look, why don't you go back to the office and find out why UK banks' loan books are growing at 12%. So I found out and called him back. I said, John, it's because the banks are borrowing from each other. right? So I mean, until that point, he hadn't, the banks were borrowing from each other. Imagine this country's credit growth, one of the world's largest economies, 12%. Household credit growth is 3 or 4. Corporate credit growth is 4 or 5. The whole system is growing at 12% because the banks are borrowing from each other. So he told me, figure out how are they doing it, and that's when I dug into it. Mortgage-backed securities, CDOs, CLOs, basically Lloyds Bank borrowing from HBOS borrowing from Barclays borrowing from Lloyds, and that's what led us to say in early February 2007, that this country will blow up, it will go to hell in a handbasket. But the reason we got that insight wasn't because I had figured it out, but because he'd spotted something in the real world which made no sense to him, which was, why is credit growth double digit in a country where nominal GDP growth is 4%, and neither households nor corporates are borrowing. So I've tried to follow that. It's not as if it's been, I've been able to figure out things as much as he can. And wherever, in the real world, you see things that don't make sense. So for example, next door, there's a seminar on VC startup fundraising. So when you see a startup fundraising conference in a 5-star hotel, you need to figure it out.
Please give them a hand for the wonderful sort of panel we have.